Well, good evening, all. Ira Epstein, and here we are after a wild weekend, right? It is Monday, the 15th of April, tax day 2024, 6:35 p.m. Central Time. So Hamas came back to the table. Of course they did, after Iran attacked Israel. And they said, yeah, we'll make a deal. We'll give you less than 20 hostages. You got to release the Palestinian prisoners. Israel forces got to pull out. There has to be unimpeded access to go back to the north. Israeli troops will not be there. And we'll do it in 3 steps. The first step, Israel, you do all those things. We don't do anything for 6 weeks. Then in stages out of under 20, they won't tell you how many people they'll release, we'll give you a group. And then 6 weeks later, another group. Ha! They're smoking something. It's keeping them going. That's all I could say. I don't know who's their head negotiator, but that isn't going to work. So Israel's response immediately on that today was the plans are now apparently going to be released to begin the evacuation of the civilians from Rafah. And I'm imagining Israel will use the cover, if they're smart, of the attack on them, not strike back at Iran at this time, and go and finish the job they've got to get done while world sympathy moved. The needle shifted back to Israel upon 330 missiles being fired at them. All right. I didn't like that immediately an IDF general on the base said, yes, Israel's attack on Iran is imminent. Shut up. If you're going to do it, you do it. You know, you don't have to talk about it. Use the advantage for the moment. President Biden, in this case, I applaud him. He told them the deal. Take the win. I agree with him. You got to know when you won something and stop. The world doesn't want to see Israel and Iran go at each other. And this bravado stuff, you hit me, I'll hit you back. Nobody got killed, thank God. One girl got hurt, and I feel terrible about that. And it proved a lot to both sides. End that. Use the time, Israel. If you're going to finish this deal up in Gaza, take the time, all right? You've got a small window here where you can get things done. And nobody will like that, but at least you got that sympathy going. So today the markets looked at U.S. retail sales, and it didn't like what it saw. The consumer is still out there. They've shifted a bit. They're careful with what they buy, but they're buying furniture. They're certainly spending more on gasoline. You know, there's no choice about that. They're not buying their sporting goods. They're not buying those type of items. But again, it was a sign that the consumer continues to spend. And what it did is that immediately, when that report came out, boom, you just dropped the bottom out of the bonds and the notes. You'll see that in a moment here as the markets came screaming to the downside. Okay. And that's because you're now in the 465 area in the 10-year note. That weighed on the stock market, which is trying to stabilize tonight, all right, early on. The stock market confused the heck out of me. I'll tell you, I got confused on Sunday night for a reason. Normally, you see an attack like that and people run for a couple of days for the safety of the U.S. dollar. The bonds and notes, they don't fall. They go up in the futures markets. And the gold market goes up. Gold was steady to lower. The dollar was down a bit, actually, to tell you. Bonds and notes didn't bounce much at all to the upside. They reversed course early last night and then just kept falling. And you weren't going anywhere in the energy. That all changed when the Israeli war cabinet meeting ended and these statements came out and the market reversed course. The sentiment instantly changed, flipped like that. I was watching the timing of the end of the meeting. I was watching the markets. I said, what are they going to say? I hope they say nothing. I hope they say nothing. And boom, the statements came out and that did it. And the market responded to it. Okay. Israel's statement, why don't you just let it sit, keep Iran nervous about what you'll do or not do. There'll be world pressure on Israel, tremendous pressure from all kinds of leaders, Mideast, Europe, and the U.S. Stop already with going after Iran. I don't think they're going to be able to stop them with Hamas with this latest proposal. When we look at the E-mini S&P on a weekly chart, you're down 53 points for the week. 63 points. So you got hit pretty darn hard today, as you could see. You could see how the bottom fell out of the market. And I'm telling you, in the first part of the morning, if you were watching any of the financial stations or with me, markets were higher. And I'm going, I was surprised. I mean, if you had me bet with you, I'd have bet the other way on all that. It took a long time, but it all came back the way that it should have gone over this. Market down again through here. And as you could see, you're now far away from the 18-day average of closes. I know this is hard for people to remember, but if you'll recall when you came back here, I said, now the battle begins. You're going to fight a battle at that 18-day average, and all the stock indices was what my guess would be. It was based off the S&P, and we'll see what the next move is. We know what the next move now is. It's to the downside. You're under the Bollinger Band, so you're getting overdone very quickly, and you're oversold. Do I think this has big legs to it? I do not. Do I think the market between right now here and the 50.02 level is waiting to see if the buyers that have all that cash on the sideline are going to come in? I absolutely do. Is there a buy signal here? No. It's just an oversold market that's finally down enough, and people that want to start coming in always look at these type of breaks. I'm not in. Should I be deploying money? Where would they deploy it? Well, in the NASDAQ, over time, I don't think that the Mag 6, I can't include Tesla as a Mag 7 stock anymore. It's the Mag 6, maybe the Mag 5 because Apple's got problems too. But Tesla today let go of 10% of their workforce. I think I had the numbers wrong. It's 15,000 people. I might have said in the Spider ETF 15%. It's 15,000 people, 10% of their workforce, bye-bye. And the problem there is, the car isn't selling. You can tell me anything you want. The car isn't selling. That's why it's down at this point. And their truck has got its own issues. They've stopped production for a while, the Cybertruck. Higher highs, lower lows under the Bollinger Band, again oversold. You didn't spend any time in the Dow at that 18-day average. I mean, none. You basically went from a top, and in short order, you just fell apart in that. You did spend time in the Russell. So 3 of the 4 markets did that. Now, you're under, for the first time, the 100-day average. We'll see if it can stay there. Often the first challenge of that, if it does for a couple of days, it might go to the 200-day average of 1955. But there's nothing bullish on these charts. They're too oversold to go short. It is a market that as much as it went up, it ended just like that on traders too. Very unusual. This is different. Bonds and notes are still bearish as can be. The market is saying the Fed's not ready to move. I keep watching TV. I understand today, finally, in the afternoon, Morgan Stanley gave up on a June rate cut. They had been a diehard on it. I understand today they finally gave up on that. I don't see that happening, and I think they're all wrong to talk July. But that's me. I'm not seeing anything yet that says, including today's retail sales that came out hot, that says that the Fed has any reason at all to start thinking about cutting the rate. They can talk about the game plan, but are they really serious they're going to do it anytime soon? They need to get a lot of weak data, and so far all the data coming out is not weak. Still bearish? Are you going to embed, or did you embed? So let's look together. We come back here. So can't go by Tuesday, but we can go by Monday. Monday, both numbers under 20. Day before, both numbers under 20. And the day before, you're embedded. So the first hard rally in this market, I think the pros are going to sell. That's number one. In the 10-year notes, it's embedded too. First hard rally. I think they're going to sell in this one. That's in the 5-year. In the dollar index, you're over the upper band. No, I don't think traders rush to buy it. You're not embedded. You're overbought. It could run. I wouldn't teach to do that. And in the euro, I wouldn't teach to sell under the Bollinger Band in an oversold. But I'm going to do a special report this week on the euro currency and give you in it my ideas for FXE, for the eurocurrency itself, for the price counts as to where they're at, the seasonals as to where they're at, the monthly and the weekly chart. I'll probably do that tomorrow. So I picked out the market I want to do it on, and there'll be some specific recommendations. In the British pound, you've begun the embedded process. You've moved to the right-hand side. I'm looking at a market that if it gets some weak numbers this week in employment, CPI, and so on that it's looking for, they could be a candidate for somewhere between a June and August rate cut. So the market is beginning to smell all this. In other words, remember I told you there's going to be a race to the bottom? It is on. It is the USA race. We're going to win by staying the longest up. And now it's a question of who's the other ones that join the Swiss National Bank on the way down. Bitcoin. You've got to remember, as much as Bitcoin is down, April 20th begins the process of what? The halving. So you're a miner for Bitcoins. You put in all the effort. The same effort you're doing after the 20th of April will produce half of that amount of a Bitcoin. So it makes it doubly expensive for everything you're doing, the wear, the tear, and this is where a lot of the miners will start falling out. The strong will survive, those that have put money away for this event. The new boys won't. And they're going to have to compete, these people now, with double the effort for the same price, and the electric costs are up. America, again, is one of the big centers for this. So they're going to have to compete now with all the AI centers that are going up. Not probably the best business to be in. In Brent versus WTI oil, the 2 Junes, you keep climbing, and you should, because the area that's at risk is, of course, everything in the Strait of Hormuz. When you look at June Brent, the market is overbought, a rally. It's not throwing out new buy signals. It is saying to you, okay, I'm above the 18-day average for upward bias, but it has not acting bullish. And I teach, it doesn't mean I'm right, that when a market's overbought, generally speaking, new money doesn't deploy. Now, does everybody do the same thing? No, but the rules of thumb with this work that way. WTI, the same thing. Same thing in the gasoline. You're not making new highs right now. You're playing games with them. You could at any point. Certainly if Israel went in right now and made an attack on Iran, you can count we'd wake up in the morning, this stuff would be shooting up. And in the natural gas, I'm definitely in the bear camp in this market, looking for even lower prices because we're going to produce more. Now, let me tell you one of the things that the House of Representatives is trying to do in oil. Not gas, but oil. They are trying to pass a certain House bill that I write about in my report right now. And in that bill, they're going to put sanctions on China if it buys Iranian oil and uses the SWIFT system and other systems so that they can do this. In other words, China could get locked out of the banking system if the bill gets passed in what I read. Now, I haven't seen how the vote went or if it's even been called up. It was supposed to be, but I haven't seen enough on it to tell you that. But the first reaction is, how do we go get them being Iran, and stop this nonsense that they're able to put out 3 million barrels a day of oil. China's getting 1.8, and we've been blind to it. We as the Biden administration, because it helps them. Oh, if China's taking that, they're not buying other oil on the market, and it keeps U.S. prices down. But if the House goes after this and if the Senate passes it, the President's got his hands full. Does he sign the bill? When he does, I expect that you would see prices will go up because China's teapotters, as they're called, will need this oil. And we'll see what goes on with that. So those are the things that you look at right now. Now, in terms of news for tomorrow, you got Redbook Group coming with their weekly updates. We have the U.S. housing starts and building permits. Keep in mind, interest rates are marching higher, so regardless, the guy buying has to have it locked in some manner and can afford it and qualify for the mortgage. The Federal Reserve will release their monthly industrial production and capacity utilization data tomorrow morning at 8:15. So we've got that. I'm sure there'll be a host of Fed speakers that come out. Today we saw John Williams come out, and I write about that in today's research. I keep talking about all that, but I got to tell you, I've put together our new charting course. I want to teach you swing lines, moving averages, stochastics, Bollinger Bands, and window envelopes. I want to teach you using first a PowerPoint, show how this works, and then from there, take you in with all new videos. There's 45 of them, almost 4.5 hours of videos to teach you how to work the way that I use all these different vehicles. The charting software that we use is included. There's 2 versions. You'll get one or the other if you haven't used them both just recently. 30-day trial to my research is included, all research that I have, and you learn. And that's what this is about. You go to iraepstein.com under education, or you can move your cursor right up here. There's a 10% discount inaugural. I just launched the course, so that's what I'll do for a bit here. And I hope you decide you want to learn this technique. Can you build on it for yourself? That's what it's all about. I'm Ira. You have a good evening. I'll see you in the morning.